Your credit score is the most important number in your financial life, and today I'll show you the 6 ways to effortlessly boost your credit score this year. So, your credit score is the number banks use to determine whether or not you're reliable with your money. Think of it like a report card. Most credit scores range from 300, an F, to 850, an A+. Now, the first 10% of your credit score is made up of either two things depending on the credit agency, and those two things are either derogatory marks or your credit mix. So let's go over the first one, your credit mix. This is basically the type of credit lines that you've opened in the past, and the more type of loans that you've had, the better your credit mix will be. Some of the different types include credit cards, student loans, personal loans, car loans, mortgages, and a few others. You may be thinking, but wait, do I have to open up all of these? And the answer is no, because banks actually really see these loans all as two types of loans: revolving lines of credit and installment loans. Revolving lines of credit are like credit cards and home equity lines of credit, HELOCs, where you have a loan limit or like a pool of cash that you're allowed to borrow from, and when you pay back that money or fill back up the pool, you can take from it again whenever you want. Installment-based loans, on the other hand, are like car loans, student loans, or mortgages, where you borrow a large chunk of money and pay it back over time. But once you pay it back, it doesn't mean that you can borrow more from that same pool. When that credit line is paid off, it's done. Having both revolving and installment loans will improve your credit mix and show future lenders that you can handle both types of loans. Now, in addition to this, you can also do one more thing that'll help you with borrowing in the future that sometimes gets confused with your credit mix, and that's building relationships with different banks. Because while financial institutions like to see that you're good at repaying other lenders, they really like to know that you're in good financial shape with them. And what's great about this is that it doesn't require you to go and open credit cards with multiple banks, because what you can do is even better. For example, say have a checking account with one bank and have a savings account with another. When you do something like this in the future, when you're looking for a bigger loan, like a car loan or mortgage, both of those banks will see that you're in good standing with them and be more likely to approve you for that loan. Now, moving on to the second option for the scoring section, we have derogatory marks, which include collections, repossessions, bankruptcies, foreclosures, and anything that shows up when you didn't pay back debt. Derogatory marks make up about 10% of your credit, and even though it's only 10%, just having one mark can affect your credit tremendously. The main reason why is that lenders don't just look at your score. They like to see that there hasn't been any mishaps in your credit history with other lenders. In addition to that, most derogatory marks will stay on your credit for a few years. And in the case of bankruptcy, it's up to 10 years. So unlike with other parts of your credit score, the derogatory mark section is a long-term section in your credit score. And because of this, I cannot stress enough how important it is to not have any derogatory marks on your credit report. Now, if you are trying to rebuild your credit because of a derogatory mark that has already been placed on your report, you'll see different credit repair agencies advertise a few different ways to remove those marks. And while some things like collections may be easy to remove, things like bankruptcy are basically impossible to remove until the 10 years is up. With that said, if you do plan on paying anyone for credit repair service, do as much research as possible in advance, because depending on the situation, they may try and sell you on fixing something with your credit when there's nothing they can really do besides for send a few letters that you could do yourself. Personally, I've worked with family and friends on doing this process, and I can tell you it definitely does require multiple attempts in some cases and can be a pretty daunting task, which is why I cannot stress enough again how important it is. If you can avoid any derogatory marks, then please do so, because it's the best thing for your financial future. The next component of your credit score is inquiries. Inquiries is when a bank pulls a hard credit report from any or all of the 3 credit agencies: Equifax, Experian, and TransUnion. These inquiries make up 10% of your credit score and last about 2 years on your report. So if you open up a credit card and they pull a hard inquiry, when other banks look at your credit report, they'll see that inquiry for up to 2 years. Now, what's important to know is that lenders can pull hard inquiry without approving you for a loan. And this often happens with credit cards and even car loans. For example, when I went to go buy a car a few years ago, the dealership had pulled 3 inquiries from 3 different banks. I was only approved at the time for one bank, but all 3 inquiries will still placed on my credit report. This is a pretty standard practice at dealerships, and I didn't realize that if I had only done one inquiry by applying for an auto loan myself and getting pre-approved, especially since the one that I was approved for of the 3 was from my own bank, then my credit score wouldn't have dropped as much as it did. Now, with that said, inquiries don't have a huge impact on your credit unless you have a large amount of them, but at the time, this was one of the things that was keeping me from a few months later to a year and 800 credit score. Moving on, as a side note, if you are new to the credit scoring game and want to know when someone might pull an inquiry, it's normal whenever a situation calls for your social security number. So landlords might pull a hard inquiry when you apply for an apartment, or stores might pull a hard inquiry when you apply for a store credit card. It's important to just be cautious and ask, if you can, whether or not they'll pull a hard or soft inquiry, but in some cases you can't avoid having your credit pulled. For example, when applying for an apartment, most places will require that a credit check is done. With that said, just make sure to stay alert of when people and company are pulling your credit. Next up is your credit age. Your credit age makes up about 15% of your overall credit score, and is not just how long you've been borrowing, but an average of all your open credit lines. So if you have one credit card open for 3 years, then the average age is 3 years. However, if you have one card open for 3 years and then another open for 1 year, then your credit age is 2 years, the average of both of those cards. So you can see how technically opening new lines of credit will decrease your age, and the older your credit age, the better your score. But what happens if you close out one of your credit lines? Well, in this case, if you have the same 2 credit cards open, one that's been open for 3 years and another that's been open for 1 year, then when you close out the one that's been open for 1 year, your average credit age will actually increase to 3 years. But if you close out the one that's been open for 3 years, then your average credit age will actually decrease to 1 year. Personally, I think the idea of starting off with multiple credit cards is the best way to go. I like the idea of having 3, but many people, including myself, start off with just 1, which is the norm. Credit cards and borrowing money in general can be a daunting task, so don't take on more than you can handle. But with that said, let's talk about one trick you can use to impact your credit: authorized users. This can be both a positive and a negative way to impact your credit age, affecting your credit score. If you don't know what an authorized user is, it's basically having someone added to your credit card or being added to someone else's credit card, and effectively having that credit age added to yours or their credit. For this example, let's say you know someone that has good credit and you want to be added to their credit card. If you, let's say, only have one credit card and it's been open for 3 years, being added to someone else's credit card that has a credit age of, let's say, 5 years would then make your average credit age 4. But like I mentioned before, this could have a negative impact, as if you're added to someone else's credit card that's only been open for 1 year, then having those 2 credit cards would decrease your average credit age to 2. So the longer that credit card is open under that person, if it's older than your average credit age, can positively impact your credit. However, if it's lower than your average credit age, can have a negative impact on your score. And there are other negative impacts that it could have on your score, like the person maxing out the card or missing payments. So it is important to know that while this may have a positive impact, that there is some risk to your credit if you choose to go this route. So with that said, be cautious of who you are doing this with. Now, the second last thing you need to know to improve your credit score is your credit utilization. Your credit utilization is the amount of credit that you're using compared to the amount that is available to you. So if you have a credit card that allows you to spend $1,000 and you spend $500, you're utilizing 50%. It's important to note that the credit utilization changes from month to month, meaning that this is the one part of your credit score that can change vastly in a short period of time. With that said, credit utilization makes up about 30% of your score, so it's important to keep that utilization low. I personally like to keep my utilization under 5%, meaning that if I had a credit card that had a limit of $1,000, I don't like spending more than $50 of that limit. However, the max recommendation is 30%, so 300 of that same 1,000. Just remember that the lower the utilization, the better for your score. Now, just like with all parts of your credit score, this isn't as simple as it seems, because the way you calculate this is based on your credit lines. So let's say you have 3 credit cards. The first has a limit of $20,000 and you have a balance of $5,000. Credit card number 2 has a limit of $8,000 and you have a balance of $4,000. And credit card number 3 has a limit of $1,000 and currently you have a balance of $300. The total available credit to you would be $29,000, and the total amount that you're currently using would be $9,300, meaning your current credit utilization would be around 32%. So in order to decrease that utilization below 30%, you need to pay around $580 towards towards one of the current loan balances. But what if you don't have that money to spare and need your credit score increased quickly? There is one credit score trick that can decrease your credit utilization, and that's actually by increasing your credit limit. But before I tell you that, I want you to think of your credit utilization as a glass of water. Currently, the glass of water is about 32% full, and in order for you to decrease it from 32% full, you can either pour out some of the water or get a bigger glass. Paying off your credit card is pouring out some of that water, and increasing your credit limit is getting a bigger glass. So how do you increase your credit limit? There are about 3 ways that you can do this. You can either 1, open up a new credit card, and that would increase your limit to, let's say, $3,000 and drop your credit utilization below the recommended 30%. However, this would most likely pull a hard inquiry and decrease your credit age. Second, you can ask your credit card company for a credit limit increase of that same $3,000, avoiding decreasing that credit age, but potentially still pulling a hard inquiry. Just depends on the bank. I would call and ask them just to be sure. Then the last way you can increase your credit limit is by being added as an authorized user to someone else's credit card. And if that person doesn't have a balance on the card at all and the limit is above that $3,000, then your utilization should drop below that 30% threshold. Now, as I mentioned before, being added as an authorized user does require you to trust the person that you're being added to the card with, because if they do max out that card to 100% of that $3,000, the amount of credit you're using goes up from $9,300 to $12,300. And because your new credit limit is $32,000, it would make your new utilization 38%, worse than it was before. So be careful. Now, the most important and last part of your credit score that you need to know is your payment history, which makes up about 35% of your credit score. Basically, your payment history tracks if you've been making your monthly payments on time, and if you miss payments, this will negatively impact your score a lot. This is why I normally suggest setting up auto payment, as it's an easy way to make sure that you never miss a payment. But if you do miss a payment, it doesn't mean that your credit score is completely ruined, because most lenders, like with your credit cards, provide a grace period before they leave that fictional F on your credit report card. For some lenders, this is a 30-day period, and for others, it's shorter. So I wouldn't mess around with paying this bill. Now, if you realize you have missed a payment and it's only been 1 day, I would pay it as soon as possible. And don't freak out. This happens to everyone, even me. And that's the beautiful part about the grace period. But what if you don't have enough to make the minimum payment in your bank account? In this case, I would call the bank, whether it's a car loan, credit card, or any other type of loan, and ask them if there's any way they could lower the minimum payment. Most people don't even know that this is an option, and that it doesn't hurt to ask. The banks would rather receive some payment from you than nothing. Now, what if you've already missed the payment and you already have that missed payment reported to your credit score? Again, there is one more trick that you can use to improve that score, which brings me back to the authorized user. Not only allows you to potentially increase your credit age, increase your credit limit, effectively decreasing your credit utilization, but it also has the effects of adding good payment history to your credit score. Now, remember, this will only work with someone that has good credit history, and if they themselves have missed any payments, have maxed out the card, or to new credit line, then you should be a little wary of being added to that card. But if you don't know someone that has good history or is willing to add you to that card, then there are always sites when you can be added to someone else's card for an additional fee. This should be a last case scenario though, because of the fact that that fee can be expensive and is normally only temporary up to about 60 days. So even though someone might add you for a short period of time, once they take you off that credit card, your score will revert back to where it was prior. What's most important to remember though is that, again, this is a last case scenario because there is risk associated with doing something like this. So if you do, I do suggest that you only do this with people that you're close to, like your parents, significant others, or very close family members. But with that said, what if I told you there are credit cards that will literally pay you money for just using them? Click here to learn about the 10 best cashback credit cards you need to know about. See you in that video. Bye.